When it came to emergency relief funds, timing was everything for small business owner Joe Dutra of Reno, Nevada.
We looked at it as survival for our business because, like many businesses, we don't have a lot of just excess cash.
He wasn't the only one counting the days. The average small business has only 27 days of cash reserves, and many labor-intensive businesses like restaurants have much less. By the time the first round of the Paycheck Protection Program closed, a month had already passed since the first state shutdown orders. Those not lucky enough to be approved by then had to wait another 11 days as Congress debated the second round.
Small businesses in particular are very desperate. 6 weeks matters. 6 weeks is the difference between survival and not survival.
Dutra started his application as soon as the program was available, hoping for $350,000 to keep Kimmy Candy running. He tried working with his usual big bank, but even the bank said they were too overwhelmed to help.
Basically, what the president of the bank told me, he says, you would be better off going with a smaller bank that maybe it doesn't have as many clients.
That's when he turned to River Valley Community Bank.
There was a lot of urgency around the program, kind of a race to get there before the resources run out. We have the ability to be pretty darn agile and move quickly.
With the bank's help, Dutra received his loan at the end of April, in time to keep many of his manufacturing employees working without interruption.
It was the most important thing that probably happened to us this year, because if we hadn't received that, we would have been dead in the water.
As it turns out, working with a small bank may have made a big difference for many business owners. In the first round of funding, states with more community banks got more of the money. About 60% of the loans in the first round were made by banks with less than $10 billion in assets. Usually, the 20 biggest banks issue about 60% of small business loans. But with hundreds of thousands of applications flooding in, big banks struggled to respond quickly to some customers. On the day before the first round of funding ran dry, the top 20 banks had only issued 13% of PPP loans. Big banks caught up in the second round, and by mid-May, funding had become more evenly distributed across the country. In the meantime, many community banks have seen an influx of new customers.
Communication is huge. We have a lot of big customers come over from the big banks just because they submitted an application and had no idea where they were. They didn't know if they were approved. They didn't know if their application was received. They didn't know where they were in the process.
Lux said the connection that community banks have with their customers contributed to their speedy response.
They had full confidence that these would be repaid. In many ways, it's a better business system than the large banks do, who don't really know their customers except by a score.
But in recent years, those relationships are harder to come by.
There's been a steady decline over decades in the number of community banks as large banks open branches in a number of suburban areas.
After the 2008 recession, big banks got their bailouts, but smaller banks had to weather the downturn and then face new regulatory costs. The losses were widespread, but especially pronounced in certain states, including Nevada and Oregon, the same states that received less funding in the first PPP round.
This may be a wake-up call in some regards that it is important to have a relationship with the community bank. I can't tell you how many customers have come to our bank and say, I wish I would have done this years ago.
Joe Dutra is one of them.
I think we're going to try to do as much business as we can in the future with smaller banks. There is definitely a place for smaller community banks to service small to mid-sized companies like mine.
Mark Fahey, Newsy, Washington.